All right, everyone. Well, thanks for joining us tonight. Appreciate it. We won't hold you very long. It's just it's our last webinar of the year, and just want to share kind of what we have going on and some plans for 2025, and just let you know what you can, available to invest with us. And if you have any questions, we'd love to just keep talking. So, again, Jesse from AJX Capital. You see some of my team here, and we're really working on the 506C AJX Diversified Real Estate Fund. And I'll tell you a little bit about who we are. So me and my wife began in 2010 as a fix and flip company, and we quickly evolved into three main companies. The fix and flip side, which is AJX Homes, which we've done about over 1,000 flips. AJX Properties, which we really focused on buying single family rentals. Gotten over 200 single family rentals at the moment, throughout in the different markets. And then we created AJX Holdings a couple years ago, and we've been growing that side of it and getting into buying our own apartments, being in some partnerships, and really jumping into that side. And you can see we have right around over 900 multifamily units in AJX Holdings now. So between the two, almost 1,100 rental units. A couple places we invest in. California, I mean, we all started in San Diego here, and then we expanded. We're in Tennessee, Mississippi, Alabama, Georgia, Florida, and Texas. I can tell you right now, our main main areas is definitely California, Texas, and Florida at the moment. But we do look in other landlord-friendly states. A little bit about who the team is. So me and my beautiful wife, Lillian, again, we've been doing this for over 20 years, over 1,000 properties, over 1,000 rentals, about $500 million in properties that we've purchased and sold. Lori Bingham, our COO. She's been a chief operating officer for multiple companies, and just she's helped me lead the team in getting us, dealing with all the diversified companies that we have. Jeremy, he's our managing director, and he's overseeing about 100. Oh, Jeremy, I'll let you kind of tell a little bit about yourself.
Yeah, thanks, Jesse. So over with the AJX Capital, currently overseeing roughly $100 million plus in our portfolio size as of today. And prior to, oversaw close to 900 units prior to joining AJX. So came over to help build out some of the multifamily division and help out with some of the financing along the way, given my prior lending background in finance as well. So happy to be here.
Great.
And then I'll give it over to Paul.
Yeah, hi everybody. Yeah, I started as a loan officer for the last 30 years, working for private money company. And that's how I became a trusted investor, investing in the projects that we were lending on. And ran into Jesse 15 years ago in 2009, started lending on his projects and started investing in all of his projects and realized it was a great company to be with. The peace of mind of knowing that they're going to do the project right and get a return not only of my investment, but on my investment as well. And until this day, I still invest with Jesse, and good part of my portfolio is with Jesse and AJX.
Great. Thanks, Paul. Appreciate it. And last but not least, I want to introduce Abby. Abby's new to our team. She's our new fund manager. She has a great experience, and I'm super happy that she's here to join the team and really help us grow AJX Capital. So, Abby, would you mind sharing a little bit about, your past and about yourself?
Yeah, for sure. Hi, everyone. Nice to meet you. I'm coming from another firm where I did something similar, built out their capital raising arm. We really worked strongly in multifamily, self-storage. So a lot of experience working with investors and kind of getting through a lot of the paperwork and some of the fun stuff that happens at the front end there. But just really, really impressed with what I've seen out of AJX and their track record. So I'm so excited to join the team and get going.
Awesome. Thanks, Abby. Well, everyone, just again, a little bit about our investment strategy. Just again, we're just a diversified fund that's primarily used to fund the three companies: AJX Homes, AJX Properties, and AJX Holdings. The fund, just a little bit about it, it's a 506c again for accredited investors with a minimum of $50,000. Our target raise is about $20 million. We're ramping up and getting on our way there, you know. The fund will operate as a capital vehicle for acquisitions and asset management. Single family assets lent by the fund will be secured and recorded by trust documents. The multifamily assets, equity investment opportunities will also be available through the fund, especially as we're, you know, buying them and making sure we're grabbing the right deals. Each investment member shall receive a promissory note and loan agreement for the loan it's making to the fund as its investment. So a little bit of the investment criteria. Again, I mentioned the 50,000 minimum. It's a 1-year term for the first year, and again for it's a 506c for accredited investors. Pretty much the 3 investment options that we have. The first one is for first position liens, which is between 7 and 10% average annual interest. The second one is second lien positions from between 11 and 12% average annual interest, and a lot of those are on our flips and our rentals. And thirdly, with AJX Holdings, we have the multifamily limited partner option, where the return targets are around 14 and 18%, sometimes even more. But again, just really that was the whole point of creating this fund, is to keep it diversified and have options for our investors. Some want long-term, some want short-term. And just to give you guys an example of what we're investing in, here's our first one. It's an opportunity in San Diego. Paul, would you mind maybe telling us a little bit more about this new deal?
Yeah, sure, Jesse. This is a 2-story house in El Cajon, which is a suburb, probably 15 miles east of downtown San Diego. It's a 2-story, 4-bedroom, 2.5 bath, 1,818 square feet. It was built in 1984, and it's only had one owner. So the person who's selling it to us was the original owner of the house. So he's kept it in good shape. There's tenants currently in there, but he lived in the house for the vast majority of those 40 years. We're buying the house for $740,000. The budget's $114,100. The estimated sales price is $970,000 based on comps in the area. We're looking for $776,000 in first position on a 9.5%. It's a 1-year term. However, the average fix and flip in San Diego is about 120 days, which is about 4 months. We try to buy the property and the next day start work on it. The rehab budget usually takes a month to 2 months, put the house on the market, and sell after that. So we're looking for investors to come in on the $776,000.
Yep. Great. Well, again, that's one opportunity we have here, and here's a second one to go over.
Yeah, this is a house in Oceanside, which is about 40 miles north of downtown San Diego. It's in North County, part of San Diego. Oceanside's had a real renaissance in the last 3 to 5 years. And there's a big military base, Camp Pendleton, close by, which really helps it's good in terms of the values have been steadily rising. This house is a 4-bedroom, 2-bath, 1,644 square foot house. We're buying it for $840,000, $130,000 budget. We estimate the sales price to be $1,110,000. We're looking for a gap loan on this, which is a second trust deed, 12%, 1-year term, $169,000 is what we're looking for. This house closes at the end of this month, so we're looking for financing right now.
Great. Paul, and just on this one, the 169, that could be between one investor or multiple investors,
Oh,
correct?
yes.
Great.
Yes. One investor could take the whole thing, but we could also break it up with multiple investors to add up to the 169, and they all receive the 12% interest on the investment.
Great. Thanks, Paul.
Yep.
Here's another opportunity we have. I think I've been, putting it on social media and talking about it. Super excited about it. It's an 11 unit multifamily apartment in St. Petersburg, Florida, and love the area. We flipped there. We have boots on the ground, and I just want to share that the team does a lot of due diligence on a lot of deals, and when we get a good one, it's super exciting. Jeremy, would you mind sharing a little bit more about this one?
Yeah, for sure. So, as you notice, this one is currently in due diligence. We're going through and walking all the units, which we've done already about a week ago with our in-house head of construction. And what we're seeking on this one is a long-term business play. The seller has kept things in really good condition. There's room to increase rents. However, we have a minimal rental increase projected. It's more of a long-term cash flow play than a total return play. What I like about that is it mitigates the downside risk. And if the market or the macro environment turns in our favor, we have the opportunity to sell with valuations being high. So if rates continue to come down and cap rates as well come down in a really strong submarket like St. Pete, then we're set up in a good position to capitalize. So opportunistic at the end of the day. What we're offering here is a pref rate or preferred return rate of 8%, followed by a 70-30 split. That's 70% to the LP, 30% to the GP. And our closing timeline is projected to be about a month out from today, mid-January. And the total investment opportunity is looking to be around $700,000. So definitely reach out if you're interested.
Awesome. Thanks, Jeremy. Well, again, super excited about this one. And then we have two other ones that Jeremy, maybe you could tell them a little bit more about.
Yeah, so these are current investments that we have, and we're offering two separate deals. Similar structure to what's considered preferred equity. It's more of a fixed return, no upside, but the way that this is positioned in the capital stack, if you will, is a little bit safer than the common equity investments. So there's probably some questions on these, but there's two different opportunities. One of them is for 725,000 in total. The other one is for $500,000 in total. We wanted to keep at least this on the radar in case you're looking for some investments before end of the year, something that's a little bit either, we've got debt options, we have equity options, we have preferred equity options. So yeah, it's all about being diversified. Wanted to put this out on your radar and get it out there before the end of the year. So as it says, definitely reach out to Paul if you have further questions on these two.
Yeah, that's great. And everyone, I just wanted to mention the beauty about with our fund is that because it is diversified, it doesn't hold us to one particular asset for you guys. So if you want to invest some money in a multifamily, if you want to invest some money in a flip, like you're allowed to, pick and choose what you want to go into. And so it really is either you could put it all in one or all in the other, or really it's you pick and choose with Paul. He goes over each deal, and it just gives you a lot of options. So. We did that on purpose because we really wanted to give you guys as many options as we can to make you guys feel like your money is not just in one spot. It could be in different ones if you guys like. So, Jeremy, quick question: how big units are those two properties? Just so everyone knows. Oh, got you on mute.
One of the properties is 103 units. That's the one that's requiring 700,000, and then the other one is 52 units. So we've got a good size to each one, and these are in order to finish out the construction, and then we have several exit strategies, whether a refinance or a sale. We always like to keep a few options on the table.
Great. And just so everyone knows, we built AJX Homes with the flipping side, and we have teams in each market that we flip. But the other thing too is we actually have a lot of people don't know we have a full team for the multifamily side that actually Jeremy leads. So we have an asset manager, we have a full project manager that he's the only project manager for our multifamily projects. So we're very in tune with it. We want to be very involved. and they're visiting these properties a lot. And we want that, right? It's so important to know we have boots on the ground. They're seeing exactly what's happening. I'm in San Diego, and I just know that they're flying there, seeing these properties when I can't. And it's so important to know that these things are moving along in the way we want them to. So just wanted to share that. Lastly, everyone, for those of you who don't know Hope Paul, you met him today, and I can tell you he's joy to speak to. He'll if you love golf, he'll talk to you about golf all day long. And please feel free to reach out. You could scan the code. Here's information, or just go to our website, ajxcap.com. And we truly appreciate you guys being here. So we do, and we just wanted to open it up for any questions if you guys have any. Love to hear them. You got the team here, so we're an open book, and love to hear what you guys want to do this year or next year with us, and let us know. Feel free to put it in the chat or even raise your hand.
I beat him. I got my hand raised first, guys.
All right.
So a question for Paul, of course. With deals, that one that you showed in San Diego, I assume not every deal gets, a second lined up. In that case, what do you guys typically do as a company when you're coming down to, the closing timeline?
You mean in terms of raising money for the second?
Yeah. Yeah.
I get it done. I
Love
hope
it.
to get it done.
Yeah, because I've seen on some other deals where, we'll kind of close within our own funds, and then it doesn't mean the opportunity's gone forever. I know sometimes we've been able to still have folks who want to participate join in after the fact that we
Yeah,
close it,
absolutely.
and they'll still be able to allocate. So Paul moves fast. That's kind of what I was hoping he would say. A lot of the opportunities are gone long before, especially in San Diego, where it's our backyard. But there are sometimes opportunities that have closed, and we may raise some funds a few days post-closing as well.
Yeah, there are
Yeah.
times, there's plenty of times when, we don't have the funds, or I don't raise the funds for the gap loan. And I just continually, reach out to my investors. And because we do so many flips per month, within usually 3 to 5 days, another flip is paid off. So the investor has gotten their investment back, and always successfully. So since they've gotten their money back, now they're willing to put their money, get it back to work. It's great that because we do so many flips, your money doesn't stay in a bank making no interest for very long. So when a property, if we don't fund the gap loan, usually within a week or so, I'll get it funded with a current investor.
Yeah, that's awesome. And I'll add to that, Jeremy. I think one of the biggest things with it is because we buy these properties so fast, because we are buying so many, sometimes we will close with our own money. And so a lot of these times that's why it's so important if you guys go to our Investor portal, the one for our fund, which shows you everything. We might have already closed on it, but we still have the availability because we move so fast, and we want to keep our relationships going to keep getting good deals, that we'll close them to make sure that we stay to our word with our wholesalers or agents, whoever's getting us the deals, and then we give you guys time to get your money together to invest in it. So it's always a plus. I see Pete has a question. Pete, good to see you.
Can you hear me now?
Yep, we can hear you now.
Yeah, we have a new administration taking over in January. What are you guys thinking about what's happening as the Republicans come in? That might affect sales of homes, interest rates. What's it looking like so far? Activity has been good under the Democrats, but what's coming up?
Anyone want to take that one, or I can jump in? So I'll start off if anyone wants to join in, but I can tell you right now, Pete, like, transparency is the more, I mean, we do a lot of due diligence, go to a lot of masterminds, we hear what everyone's thinking, And I can tell you the feedback for me at least has been it's a positive, right? I mean, there's positive things that come with the Republican side for real estate, and there is one side of it. If most of you guys who know me and know we've done the 1,000 properties and we've been in the ups and downs, is doesn't matter Republican, Democrat, what happens. For us, we're really focused on the actual, like it's the first time home buyers, right? So these are people that need to buy. These are people that need a place to live. These are people that just got married. And that's been our focus for the 1,000 properties that we've done since 2010. Doesn't mean we won't do a high-end one here and there because there's a great spread. But if you look at our track history of the 1,000 properties, that's why we focus on that side. Because we really want to make sure that they're not risking it, right? We're not going to see when, people don't want to buy, everything slows down, but what slows down first are the high-end properties. And so for me, keeping it in the entry-level space, the first-time home buyers, we're always talking to our lenders. How many applications did you get in loans? What price ranges in the markets we're in? That really tells us that's our end buyer. And so really focusing on that, not saying it doesn't matter who's in for president, what side, but we do a lot to make sure that we're not risking ourselves to something because everybody needs to buy. Doesn't matter what the interest rate's at. People are moving in to, especially like San Diego, right? Big military town. People move in and out all the time, and it's just going to happen. So I can't give a specific to the Republican. I'm just saying feedback is it's great. And we also do other things on our side for due diligence to make sure that we're protecting our investments as much as we can.
And I guess the only thing to chime in specifically as it relates to multifamily is there's no guarantees, but I know the prior accelerated bonus depreciation that we all like to take through our cost segregation studies on larger assets has the potential to come back a little bit stronger than what it is today at 60%. So no guarantees again, like Jesse said, but something we're keeping an eye on because that does help out with a lot of our limited partner investors.
Yep, correct. Does that help, Pete?
Yep.
Awesome. Thank you. Thanks for all your trust as well. Anyone else have a question? Anyone want to ask me about my mustache, why I'm growing it? That's so amazing after 47 years. Yeah. I get to pick on people too as well. So I mean, I'm gonna ask. I see Justin on here. Justin, you available to talk?
I'm here, guys.
Yeah. So guys, Justin's a very experienced investor and knows us for a long time. Justin, you got a question? I'm trying to follow your lead with your mustache. There you have it every so once in a while, but just saying in real estate, just you've known us for a while. What are your thoughts of what we're up to?
I did say it's exciting. A lot of the projects, good projects, well underwritten, good team behind it, boots on the ground, hands on deck. That's been the biggest thing I've been seeing. Consistency with that, and things will go really, really well.
Awesome. I appreciate it, Justin. I just want to pick on you a little bit, buddy.
Anytime, brother.
Thanks. Anyone else have a question for us? Any about the apartments, about what we're up to next year? I can kind of share just 2025. We're really focused on the 4 markets: Jacksonville, Tampa, San Diego, and San Antonio. Those are our 4 flipping markets. At the same time, we'll buy single family rentals there, and we'll also buy apartments there. San Diego's a little bit tougher, right? Because of landlord laws, but we will definitely still look because we have the boots on the ground in the 4 markets, and we can take things down very quickly, very easily, and we have the crews to do that. Jeremy is really focused on, again, finding us multifamily deals. As you've heard, the biggest one we bought to date, I believe, Jeremy, is 217 unit apartment buildings. So just so you know, those are great assets. We love them. We're buying an 11 unit. So it's all about doing due diligence on our properties and knowing that once we find them, we do a lot of due diligence and really checking them out. And we have the teams to finish them up. I'm not just someone with our team that we're just kind of investing in someone else's deals at the moment, but we're the operators, right? So that's so important for you guys to know that we actually are the ones making sure we get them done as we promised and as planned for you guys. So again, just want to share that. Those are our plans. Again, we want to buy a lot of units next year. Keep doing our flips. We're over 100 this year in our flips. We'll probably get closer to 150, maybe even 200 by the end of next year, 2025. So love for you guys to join us. And if you guys have questions, again, please reach out to Paul. And here soon, you'll be seeing my kids on a show called Kids Who Flip. We just finished filming last month. It's picked up by Warner Brothers, and they'll be joining the team and helping us find more deals as well. So feel free to follow us along on that as well. Appreciate you guys all your time. Have a great night.
Hey, thank you all.
Thank you.
Bye-bye.